Hello, everyone. Today is Tuesday, November 3rd, and I'm Michael Boutros. Good to be with you here this morning for this live intraday strategy webinar on SB Trade Desk. Graham, thanks for that, says AV good. Christopher, Permendra, Mark. Yeah, typically the AV is good in over here in SB, Graham. It's the live stream that we have on Daily FX is the big issue. But thanks for the heads up, my man. Permendra, we'll take a look at Sterling CAD. Remind me later in this session. I'll jot it down here. All the pound crosses are in focus here as we head into the BOE. More importantly, the quarterly or the inflation report, the BOE inflation report will be a big player, but we'll talk about that in a moment. So lots to discuss, lots of trade aspects and possibilities going around here. We talked yesterday on the SB intraday update about the dollar yen. Euro Aussie was a beautiful play right on the back of the interest rate decision from the RBA. Obviously, they decided to hold rates at 2%. Little bit of a dovish tone, though. So they tried to play both sides, saying that the rate remains unchanged, but they see inflation consistent with the target over 1 to 2 years up front. The biggest takeaway that people are running with that the inflation outlook may afford scope for further policy easing. So they're basically saying the door remains open for possibly a move on interest rates as we head deeper into the close of the year, essentially. If you look at the Credit Suisse overnight swaps at this point, looks like market participants are factoring in about a 28% chance. As I tweeted last night, guys, right ahead of the release, they were at 44% chance of a 25 basis point cut. So a little less than half. We didn't get it. Now they're looking at about 28%, chance of a 25 basis point cut. 12-month expectations, they're still looking about 33 basis points in further cuts. So from the RBA, a little bit of a balanced statement. Nonetheless, the trade was poised for Aussie strength. And this goes back to the whole premise of technicals versus fundamentals. We can talk about it all we want. If the condition is there, the announcement, the data release is simply a trigger for the market. That's all it is. They could have cut rates. We're at 44%. You would have seen people saying market expectations were already there, yada, yada. So we want to always be paying attention to price action above all. Let's jump right in. First things first, here's what the relative performance of the greenback looks like as we head into the U.S. session. You can see a nice little rebound here. We highlighted this chart in yesterday's radar chart. Basically a pretty clean opening range just above the support that we noted at 12,012, which was a 38.2. We actually did go for a run right into that support. The low came out to be 12,013. And then the thing jackknifed right through, and here we are looking for that target up at 12,071. A big level, 12,071. It was the October open. It was the reversal day close for the day subsequent to the high made of the year. And certainly it coincides near term with a basic 50% retracement of the decline. I was looking at this last night after making the post. Hey, Jason, great to see you here, man. And this could be a formation that's in play. It wasn't highlighted in the report, but the only thing I want to stress on this, because it's not too clean, we don't really have the conviction to use it yet, is just that the upper median line parallel coincides on that same exact region. Okay, so looking for some resistance up at 12,066, 12,071 for the dollar index. So where does that leave us on some of the trades that we've been looking at? Well, for dollar yen, obviously that's making a little bit more of a higher move on that. Got stopped out at break even on an entry for dollar yen last night. I'll show you that. It looks pretty clean, but the market just missed the limit literally by 4 pips, turned around and took me out at break even. So we'll try to make another stab at that. I still like the downside broadly speaking. Euro Oz, again, we'll go over that one. And as far as the dollar pairs are concerned, Aussie dollar from the report on Sunday and sterling dollar, we'll take a look at that as well, both still on the menu. Any questions on the dollar index before we move off? Again, nice representative of base dollar movements. We'll keep an eye on this one. Could stretch higher here into the open of U.S. trade, looking for resistance near term. All right, let's jump into yesterday's intraday update. So here's what we look like on the dollar yen, first and foremost. An ML that we put here together on the webinar, I think, was what we were looking at, resistance at 120.92. We're going for a test there right now, a little bit outside the spectrum of this downside slope, but it's a longer dated 618 off the high. And if you look at the daily chart, it's a pretty clean tell on sort of where the broader picture is. Let's just go to the live chart since we're here. Hey, Jason says, I'll be looking forward to your analysis on dollar yen. Here it comes, buddy. So here's what we're looking at with dollar yen. Keep in mind one thing, guys. If you're looking for guidance on this from the swing standpoint, Jamie will be on board tomorrow with the midweek strategy webinar. Again, we're working with two different strategies, but the outlook of the broader picture looks the same. So here's what it looks like on the daily chart. Now, the 200-day moving average comes in at 121. If you look at the scalp chart, here's the 30-minute real quick. I'm going to pop back and forth here. Right at that 121, there's that 618 that we were talking about of the broader range from the decline off that late October high. So if we close or push through this, the risk is for a run into 121.20. This is what we noted is what was needed to shift the broader focus back to the upside. It would necessitate a break of this, which we're getting right now. It would necessitate a break of the 200-day moving average, and really would leave you for a rally back into 2175, 2183. 2183 being the December high from last year, which was the high of the year, and the 618 retracement of the spill down here from the August sort of massacre, let's call it, for dollar yen. Also note that the 100-day moving average is there as well. Okay, so from an intraday and near-term prospect, if we do break higher here, I actually would be looking to play long scalp toward that 121.75. That being said, everything's still the same, guys. Nothing's changed. Jason said, I'm short at 120.80, and I'm now holding a loss. It's going to move against you. It's going to move in your favor. With the swing side of things, Jason, you have that room, man. I wouldn't worry about it. If the trigger hits and it moves against you, it moves against you. We'll have plenty of other opportunities. I wouldn't come out of the woods just yet. As I said, we don't have too much conviction on this being an operative slope. It was impressive that the lows here were right at that lower median line. You saw a really nice pivot along the median line itself. Long story short, if it's a breakout, we could drift a little bit higher here before turning over. The daily chart doesn't have anything imminent here, okay, until you get to that 121 barrier. So keep that in mind. Here was the short scalp that I took last night, and here's what it looks like on the 1 minute. So if you look, here is the trigger. Unfortunately, I don't transfer my charts for the live trading, so I probably should start doing that. But this is the trigger that I took. And on the 1 minute, you saw this thing teeter off right below 70. Market tested or was looking for a stretch and break above the U.S. opening range high, or the U.S. high from yesterday in general. The trigger came, didn't do anything on the tag of it and hold as resistance. We took the short right on this bounce here against the highs initially. Went to bed. We were about 13, 14 pips in profit. We're only looking for about 21. So I brought it to break even. And on the way up, we got stopped out at break even again. So we'll be looking for a possible re-entry here as we open to the U.S. market for the downside on the dollar yen. But just keep in mind that that 121 barrier is still going to be, that 200-day moving average. And although we've sailed through it a couple of times, on a closed basis, it's been pretty solid. It's been pretty solid. And the days that we do sail through it are really big range days. So just keep that in mind here for the dollar yen. Jason says, will we expect any further downside? So again, Jason, the technical trade hasn't changed. The technical outlook hasn't changed, right? It's just that you might have a little bit further to go on the upside before it comes back. I don't know if it's going to get stopped out, Jason. That's why we use stops, man. All we're looking to do is to position ourselves in the proper way, in that when the condition is that we want to be short, we're in at a good rate against a good stop. When the condition is that we want to be long, again, you're in at a good low with a solid stop. So if it gets stopped out, it gets stopped out, but the trade setup is still in play. From a scalping standpoint, I'm kind of neutral here. I'm looking for a turnover, some significant shift in momentum. I would be looking to play the short side. But remember, we just talked about the dollar index first thing in the webinar, right? And if you look at that, there's still some up room to go, right, before 12,071. You still have some room to go. So would I be surprised to see dollar yen possibly move a little higher first? No. And that's how you have to look at things. Okay, so if we just put these sort of side by side. Oops, sorry, wrong charts. Too many charts open. If we put this side by side, you can imagine a scenario where dollar yen or dollar index stretches into a new high. You possibly get a tag of that 786, and then we start to turn around again. All right, so that is dollar yen. If there are any other questions, let me know. Jason says, sorry, I'm new to SB Trade Desk. Just wondering, do we get any updates through Twitter if you guys stopped out? So Jason, definitely make sure you fill out the SB Squawk form. If you go, anyone who's new to the room, quick segue here, just go to the home page. Right here, you'll see the SB Squawk sign-up form. Just click out, fill out that form real quick. Then you just got to go to Twitter and submit a request, 2 steps. And once you got through that, you'll be able to get those notices right through Twitter. Okay. So Jason says, I didn't get notice that you get stopped out on Twitter. So Jason, the intraday trades we don't give guidance on that day to day. They're very subjective. You can play these. One person can be on the long trying for 21 pips to the upside. The other guy can be taking the short. I'd be tweeting all day. It wouldn't be feasible. So the only updates that we'll be giving on a trade-by-trade basis are the swing trades. Otherwise, in the morning, this is where we'll lay out what our framework is for the day and sort of what levels we're looking to play. All right, welcome aboard. And always feel free to ask any questions that you have there, Jason. So that's dollar yen, guys. Next up on tap was Euro Aus, and I think that was a star player for yesterday. Heading into the RBA interest rate decision, this thing was right at support, a nice sliding parallel off the highs. We were looking for a rally to sell. As we noted in the update, the bearish invalidation level was right here at this trendline confluence. You had the upper median line parallel and a longer dated median line. I'll show you that in a moment. That was just below the weekly opening range high. And if we broke through this, we were going to be neutral. But below this, we're looking for short triggers. Now, the market did see a widening in spreads, and you did see a lot of volatility right on the release. But the end of the line was you got a spike right into that region, and then this thing tanked and turned around. Initial targets at 153.28 have been taken out. We're just above the secondary target at 52.60 here, the 786 retracement. Here's what Euro Aussie looks like now. All right, so again, a quick spike right into that region. Let me snap these levels for you real quick. A snap right into that key region, held. You overshot it by like 5 pips, 6 pips, turned around. There wasn't much opportunity to get in this short right away, but then the market came back to break even. We sat there for a couple of minutes before moving right to the upside. And here's what the 5-minute chart looks like, just to give you some reference. There was an opportunity to get back on the trade after the initial spike. And guys, 9 times out of 10, I'm not just jumping into the trade on these initial spikes. You want to see price action level off a little bit to get some guidance. And sometimes you won't get the highest level of entry, and that's okay. Right? We don't live in an ideal scenario. The market is not a vacuum. You're not always going to catch that peak high, but there was opportunity to get in. Here's what Aussie looked like, or Euro Aussie looked like rather, last night. So on the release, the entry was actually right here on this last spike. If you look at the opening range, and we look at the opening ranges again, just to give us some clear guidance on what the near-term directional bias should be. If you look at the opening range from Sydney, here was the Sydney Open. The opening range high was right here, 54.21. The opening range low heading into the release was right here, right around 53.50. Okay, so you had like a 70 pip range to play with. On the release, you spiked right through. This only lasted a few seconds. This is a 1-minute chart, guys. You pulled right back underneath the opening range high for Sydney. It came back, bounced off the opening range low, and on the failure to move back above, you see that break to the downside. That was a trigger to get back on the shorts. Oops, sorry, this is auto scaling. That was a trigger to get back on the shorts. And again, initial targets down at that 53, what was that? 53.30. And again, we're still looking for a possible drop here into 52.60 to the downside. But as resistance, that same sliding parallel. that we were sitting at as support ahead of the release. So a very clean setup, still looking lower. Bearish invalidation now gets dropped to 54.08, which is the initial opening range low and the low from Friday. Coincides very nicely with the upper median line parallel. A break of the lows, and you'd be looking for a soft target at 52.16. This is just a nice pivot in price. Coincides nicely with the median line. And then the subsequent low for the month, or that swing low from October, would take you into 51.65. All right. Chris says, Mike, where was your stop on the 5-minute entry? You initially had a 70 pip stop roughly. You just answered it. Yeah, so it was against the high. And again, you have to open up the stops a little bit when you're coming into those event risks. So if the ATR is showing 20, a lot of times I'll open up the stop to 30, 35. If the ATR is showing 50, a lot of times you'll open up the stops to, 65, 70 pips. You got to remember, a lot of the price action sometimes, they're just going to be spreads blowing out, Chris. So I would hate to get stopped out of a position just because the spread got blown out. And if it does get blown out, that doesn't necessarily tell me where price is going, right? So I want to make sure we wait until we see this contraction again. Then you got a little bit better of a figure of where we're going. But the hold and the rejection right up there initially, trusting your levels, that in and of itself was a tell that we should have jumped into the position. Chris, does that make sense, man? He says, sure, thanks. All right, let me know if you have any other specifics on that. And that was Euro Oz from last night. Next up on deck is Aussie Kiwi. So this is something that we highlighted on the radar chart. And another one that came into the FOMC, that came into the RBA yesterday at an interesting position. You saw a pop back above 56.06, which is a nice long-dated 618. And again, you put a little bit more emphasis on the longer-dated key 618 retracements, but you saw some nice pivot action right there. It was the opening range high. Initially, we broke it, tested it as support, and rebounded off. Momentum probing into 60 or above 60 for the first time for the week. And on the daily chart, you saw this really start to sort of puke out here towards the lows. This is the 618 here again. And momentum had a nice trigger to the upside that was ready to go. I don't know where it went, but this is what the trigger looked like. So on that failure to break and hold essentially below that 105.57 barrier and the pivot to the upside, we noted that, that kind of shifts the near-term focus back to the upside. Now it just so happens on that RBA dip, came right back, momentum found support right at 40, and then jumped right to the upside. This one was a little bit more of a straight shot, a little bit harder kind of try to get into on the back of the release, but came right ahead of schedule, let's call it, from that 106.84 target, which was the near-term resistance that we were looking for on this rally. Just want to point out one structure again, something that we've been looking at here in the webinars on Aussie Kiwi for months now are these orange slopes that you see. I guess it's clear on the daily chart. These orange slopes have defined so many key critical turns in Aussie Kiwi since the 2014 low, which is the origin of the slope. Caught the highs here into the end of the year. The beginning of the year here in January caught the highs. Real nice pivot action all in that consolidation period between July and October before the inevitable break. Here's that same slope. Support, breakthrough, resistance, breakthrough, support. We broke through, testing it as resistance. So I'm not really eager to play any long scalps from this point, from here, if you're not already in. 107.23 into 107.11, kind of where we are right now, is going to be the critical resistance barrier near term. Okay, and if we break through that, I think you might even see a larger recovery here in Aussie Kiwi for sure, but as it stands, trade is at resistance. So quick update from that Aussie Kiwi setup from last night. John says, Kiwi dairy auction results are out, down 7.4%. Absolutely. Yeah, Chris says, can we see the 30-minute mic? Okay, thanks. Yep, here it is right for you. Here's the 30-minute. So you look at the swing high from last week, which was the opening range high. That's at 107.32. And again, on the daily chart, that's the top of the range here, 107.23, 107.24 is what we're looking for this thing to punch through. Watch the 200-day moving average at 107.60 would probably be the next target. I think I have that on the chart here. Nope, but let's highlight it real quick. Let's give me the 200 DMA. One other thing I'd keep an eye out is that sliding parallel. We're still really cleanly within this formation, guys, and that's one of the reasons that we kind of highlighted this, because if this median line is indeed broken here, then you could get a rally all the way up towards the upper median line parallel. And depending on where we are in time, that would actually look really nice at like 108.60 towards the latter part of this week, early next week. But you're seeing the beginnings of what could be, a much more substantiated push higher here if we close above this region. Again, always remember, guys, you can take a snapshot of any of the charts that you see here just by clicking on the right-hand corner here. You'll see a little camera button. Feel free to take a snapshot of any of these charts if you need them. And Aussie Kiwi, I like it. The ATR on this one was pretty tight over the last couple of weeks. It's been like 20, 23 pips. Finally starting to get into the 30 pip range, which is kind of my sweet spot. 30 to 45 pips is usually what I love to scalp. So it gives me a little bit more flexibility with the stops, a little more cushion, but at the same time, doesn't have to take a trade that might take you 6 or 7 days to get through. Any questions on Aussie Kiwi before we move off? So that's dollar, yen, euro, Aussie Kiwi. Let's jump into Aussie dollar. I tweeted this chart just ahead of the release. Here's what Aussie dollar looks like. He says, when you say you like it, you mean looking into the short setup on Aussie Kiwi? I mean, I like the setup and that the levels are very clean, that the market is respecting the levels that we've highlighted. And this is the subjective nature of it, guys. Let me go back to this real quick, Chris, because I want to make sure we're on the same page. Whether you're looking to play, I'm giving you the directional bias and the major key levels. Okay, doesn't necessarily mean we're only taking longs. If we head into the US session, this holds here, and you get an opening range break to the downside, we could play a short right back into that support at 106.83. You're looking at a 50 pip range right there, right? If we see this thing pull back and we don't get a chance to get back into the US trade session, we close, Asia opens, you see a long side opening range break, we'll play it back into 107.30, 107.60. So when I say I like the setup, it means that the technical levels are very clear. And as far as Aussie Kiwi is concerned, I'm not necessarily looking for the short. No, Chris. We noted the risk yesterday for this thing to pop through. If we close above this region, you're going to like to keep playing this into the sliding parallel here, into the upper median line parallel is the more important one for the structure that's been in play for months. So respecting the potential for a breakout here, we've been looking to play the long side. Just so happens that this was the last target that we noted. So from here, we're a little bit more cautious. I'd need to see a close above it and sort of a pullback with a nice move here to get back on the way up. Chris says, I see. Thanks. By the way, you do a very solid job, Mike. You are very clear with your guidance. Sometimes I just miss parts. No worries, Chris. And, it's my pleasure. I appreciate the comments there, my man. All right. So Aussie Kiwi is right in the books. We'll keep this one definitely on the radar. We might highlight it on the chart today if we get a conviction close above this region. And, with Aussie Kiwi, the other thing is that it sort of jives really well with a possible pullback in Kiwi dollar. Kiwi's been really, oh, there it is. Gosh. Kiwi's been very disappointing in that, the breakout. So let's just go through this real quick. We didn't highlight this last night, but it's something that we were looking at last week with the break below this level. We played the short side, right? Took out 4 of our targets. We've cleaned this up a little bit. And then the reversal off the low on the RBNZ certainly took us back above this. And I've been waiting the week out looking for some clarity. It just so happens that same level was pretty close to the opening range low for the week. So I was looking for this to clear. We broke to the downside now. You suggest that you see a little bit more of a dramatic drop here in Kiwi on a broader range. This is why this level is important. Well, let me take you to the 30-minute and zoom out there. It's because the former upper median line parallel that we were working in, this one, which guided price so well, once we broke the upside, tagged it as support, turned ahead of it. That's even a stronger signal. But then on the failure here to break back above, look what it did. You would have expected to see a sort of rebound, a sort of breakthrough, like you always see off this median line, or if you've seen in the past off this parallel, but it couldn't get any upside motion. Okay, here's a 40 break for the first time this week. Here's a move back below that 67.40 region, looking lower in Kiwi. Obviously, the auction that John is noting here obviously could be another exacerbating factor here, but looking at Aussie Kiwi sort of jives pretty well with Aussie Kiwi continuing on its route up to the upside here. And as far as the Aussie is concerned, I'm sorry to jump all around, guys, but I hope you're keeping up. Let me know if I'm losing anyone. As far as the Aussie is concerned, you know, that was a big region that we came into as resistance, 7,200. So here's what Aussie looked like on the daily chart from the first. Here's the intraday update from Sunday, and here's what Aussie dollar looked like. Okay, or let me just show you the daily, I guess. So you were starting off the week from a rebound off of a confluence support region, big region. Basic slope support, which is if you take the parallel off the highs, it was the exact slope on the lows, and it completed an exact 1618 extension of the decline. And that took you exactly into 70.65. That was the confluence region. That's where we rebounded. Today is important because if we're able to push through this zone and close above it, the momentum trigger is likely to give out off the highs from last month. And that would sort of validate a larger scale rally towards 72.80, that 100-day moving average. So if we take a look at the near-term chart then on Aussie dollar, here's what it looks like. And here's what we look like on Sunday on the open. Okay, so we just kind of took out that target at 71.80 yesterday on that run through for the RBNZ or for the RBA. Even the 7,200 sort of barrier got taken out. We even stretched way higher than that, and then this thing turned around and broke lower. So here we are testing sliding parallel, and this is where you'd look for some support heading into the US trade session. So if we do see support here, an upside or a topside trigger in momentum, let's look at the 5-minute chart real quick, see if we got anything juicy here. All right, you're getting some divergence along the lows. The oscillator making higher lows, price action making lower lows. From the high in price, trendline resistance here, might be a decent trigger. We'll see what that looks like heading into the US Open. You got a nice opening range here, just above support at 71.50. What is that? 71.58, I think. Yeah, 71.58. And that's a confluence support structure. So it might be a nice long play. If it breaks down from here, guys, you're neutral, okay? Because you're right back in the confines of the descending structure. So it could move right back to check the opening range low, and I don't want to be a part of that. But it kind of sets the stage up, again, for Euro Oz, for Aussie Kiwi. If we see a hold here with that price action we're seeing in Kiwi, might see that thing continue to blast higher. I hope the pieces of the puzzles are sort of fitting together here, guys. I hope that makes sense. Any other questions on Aussie dollar before we move on? Got one more Aussie pair to cover, and then we're sort of done with that for a while. By the way, you're pretty much spent on Aussie data for the remainder of the week. But you do have event risk coming by way of the dollar. So for Australia, yeah, we're done for the week. you get retail sales and trade balance data tonight, and that's probably going to be the last major print. Retail sales are expected to come in same as last month, is 0.4% month over month. Strip out inflation quarter on quarter, we're looking for a slight decrease in the third quarter to 0.7% from 0.8. Here's what that release looks like. And the trade balance is expected to improve slightly. All right. So last but not least, as far as Aussie data is concerned, make sure. Is the Aussie Yen. So little bit of a messy break of the level that we were looking for to give us the upside bias, but you got it. And that region was basically like this 86 handle. You opened the week just below the confluence of that major key pivot, lateral support / resistance, and the median line off the highs. Right over there. We got it highlighted. First thing. Here's what Aussie Yen looks like on the 30-minute. And here's what Aussie Yen looked like on the open of the week. Okay, so we highlighted this region here, 86.13 or so, 84.57, nice key range, 25, 26 pip ATR here is very nice. You're looking for either a topside break above here to buy dips into the upper median line parallel, or if you see a downside break, this thing was likely to plummet straight towards 84.40. This was an exact 100% extension off the highs. If you were going to see a little bit of a pop or a recovery, should have been off this level. You were getting divergence all through the lows that you made last week in price, and that was the premise of the position. The break wasn't really a conviction one, right? We sort of dilly-dallied here all through U.S. trade. In fact, into the close of U.S. trade, we were sitting right at that 86.13 level. So you really didn't have a very clear-cut move into the close of U.S. trade. It was the open of Asia that really set this thing off. And I was reluctant to take anything ahead of the RBA, obviously, but same deal on the RBA. You saw a drop, hold on a 30-minute close above that key region, and a quick reaction, exact rebound off 40 momentum was the tell. Looking for topside targets, 86.47 right here. Next one is just above the 87 handle. We just missed that. Target was at 87.09. The high was 87.06. So where do we go from here, Mike? Thanks for what quick tidbit of what happened. Where do we go from here? So from here, I just want to do one thing real quick. I was doing this yesterday. If you move this parallel to this high, it could be what's in play, and it would leave us within the confines of this formation still. So I'm not really eager to get kind of aggressive on trying to play the longs. I did like this slope just because of the clear-cut reaction that we got on that drop-off last week, rebound and a quick breakthrough. But, you know, as I usually say here, guys, the deader of the two slopes, if you're looking at two possible peaks, the deader of the two slopes is typically the one the market will hold for the longer duration. So when in doubt, you should be defaulting to that deader slope. And by deader slope, I just mean more the flatter slope. The steep ones are the ones that don't seem to hold for long. So that would leave us still within the confines of the formation. Haven't really gotten involved, to be honest with you guys, on Aussie Yen so much. I want to see that dollar yen more towards resistance. And I think if we get the stretch higher here in Aussie Yen, it might be a decent short off that region. As it stands right now, the momentum signature is just too constructive for me to try to short. There's nothing here that's bearish in momentum. Yes, you did get some divergence on these highs, but the pullback here, rebounding off 30 is not, or 50 rather, is not a very bearish thing. So could see another stretch high here. If we do come into this region, I'll be looking for possible short triggers for the scalp side. And this, my friends, is going to be the bearish invalidation level. If we clear that, look for the broader trade to reverse right towards 87.50, which is the high from last month. and then the high, or the high from September rather, then the October high comes in right at that 618, 88.64. So the levels are pretty clear on Aussie Yen. Triggers haven't been, so we'll look to see if we can get a little more clarity here, but looking for a possible upside stretch to sell near 87, 87.09. Chris, can you contract that 30-minute on the Aussie dollar, please? Sorry, I missed that. Yeah, sure. The scale chart is on there from Monday's report, Chris, but I'll do it for you. No problem. That's what these charts are, guys. These charts right here on the intraday updates are the scale charts. This is the 30-minute zoomed out to give you some reference on the points, but here's what Aussie dollar looks like. Nice clean chart for you there. B, he says, thanks. Yeah, you're more than welcome. BB Pime says, please, could you have a look at dollar CAD? Thanks. Yeah, sure. We're going to get through all the dollar pairs for sure. You have ADP data tomorrow. We'll cover that live here in the webinar, guys. Just a kind of a precursor ahead of the NFP. It's the private sector read. So we'll get a read on that. As it stands right now, market participants are expecting ADP to come in at 180,000. Last month, we got a print of 200,000. Now, the correlation with ADP and NFP is actually a weird one. You know, they tend to move more or less together, but ADP is notorious for missing larger swings in the NFP print. Obviously, the NFP print is the larger encompassing read, right? ADP is just private sector employment. But last month was a perfect example. ADP came in at 200,000. NFP's printed at 100. What was it? 142, right? Grossly missing expectations. So again, those swings are notorious. That being said, market expectations are for a print of 180,000. We'll cover that tomorrow at 8:15. It's going to print just 15 minutes ahead of the webinar, guys. So keep that in mind. But to move on, if there are no other questions here on Aussie, here's what dollar CAD looks like. Jason says, where would you recommend a stop loss on dollar yen? So again, Jason, if you're looking from the swing standpoint, the stop loss is noted for you right there. If there are any changes, Jamie will let you know. For me, I'm not in the trade right now. I'd still be looking for, like I said, that move into 121.20. I want to see what the close looks like if we hold that 200-day moving average, but at this point, I'm neutral. All right, I would not try to sell something that's in overbought condition. So initiating a new trade here is kind of off the table for me. I'd be looking for sort of a reversal near these highs, definitely some sort of momentum reversal before I try to short this again. Dollar CAD looks like this, guys. Hey, Jason, more than welcome, sir. You know, who's asking about dollar CAD? It was BB and John. Guys, dollar CAD, the same levels that we were looking at to the close last week are the same exact level. I haven't touched this thing from like a fresh analysis standpoint. So here's what it looks like. Let me just snap the levels for you real quick. All right. So the daily chart, real quick. You started off the week right into basic median line support, lower median line parallel. We highlighted this setup on the 1st. Here's what it looked like on Sunday night. And here's what the daily looked like. And we said, guys, look, the risk is to the upside. You're at the lower median line parallel. A downside break below 130 really solidifies the continuation of the downside pattern we've been looking at. That's a huge region. It's the 6.8 retracement of the entire rally off last month's low. You have the 100-day moving average right there. You have the median line off the highs right there. So this was a big region to start off the week as sort of the break barrier for the reversal here. As it stands, I do like the short side of dollar CAD, but I'm looking for a rally to sell. I'll just remind you where we reversed last week was the exact upper median line parallel of this formation, which has been sort of too clean, uncomfortably clean, right? With every single break. Break, test as resistance, right into the lower median line parallel. Rebound, break, test as support right off the median line. Rally, turned right ahead of the upper median line parallel, right? So I'm still looking for another test of that median line at some point, but we're still within this, an embedded structure. So that brings to focus now even more so than the Sunday setup. Near-term bullish invalidation now gets raised to this right here. Why? This would necessitate a break of the weekly opening range low, the 618 extension and 50% retracement of the advance, and the lower median line parallel. So if we break below here, I'd be looking for continuation down lower towards that 130 target we talked about in the daily chart, and the subsequent downside targets. If we make it through resistance at 3150, which is what we were looking at on Sunday, that's essentially the level that we were looking for this thing to rally into, which we tested just now. If this breaks through here, there's the upper median line parallel. Whatever that is in time is where you'd look to target this thing. So ahead of that, you have that 618 retracement at 3217, and then that upper median line parallel. But as it stands, heading into US right now, you're at resistance. Sliding parallel, that same slope, right there, caught that last swing high. And again, that Fibonacci confluence. Levels are super clear. For me, I need either a breach above 3150 or a break below the weekly opening range low. As long as we're in this region, feel free to play the range. Feel free to play the range. In fact, let me see if there's a near-term trigger here on the... Oh, here's a quick example, just to segue real quick, guys, back to the Aussie dollar. Here's a quick example of a trigger that might not be operative here yet, right? This is only a 2-point trigger. You saw the break. Price action did not give us a break of anything. It wasn't a break of the opening range high. It wasn't a break of a former low. Wasn't a break of a former high. So I wouldn't really do anything with that. We'll have to look for a little bit more conviction heading into the U.S. trade session. But just to show you, triggers and these things in momentum, they're great when they line up with what's happening in price. That's what's most important. That's what's the critical trigger. Hey, John, with that comment, I'm really eager to get out now, though. Be careful. Be careful babysitting your trades too much. It sounds to me like you're getting a little bit emotionally attached to your trades, Jason. That's a very risky it's a very risky thing. You want to try to be as robotic, as benign, as objective as you can. It's very easy for me to say that, but you're talking to someone who's been doing it for a while. And I know how easy it is to kind of get suckered in. You gotta put the trade on and trust in your analysis, and the market will take and the market will give. Our job is to put you guys in a position where it's giving more than it's taking, right? We're not going to hit everyone out every home run, but we want to make sure that we have proper risk management and putting ourselves in a position that's able to take advantage of some of these moves. Christopher Hudson says that's a pretty clean setup and a nice timing mechanism for short-term end of dollar support. You agree? Chris, can you just remind me again? Oh, dollar CAD. Oh, I agree, yeah. That would actually be pretty sweet, right, Chris? Imagine this thing breaking the lows just after dollar CAD or dollar index makes that rally into the highs and reverses. That'd be pretty cool, for sure. I wouldn't even be surprised if it breaks this high here, guys, and tests the median line and then turns around. Okay, these sliding parallels are both on the same slope. We've seen reaction off both of them. So, whatever is going to... Whatever the market's going to do to damage the most amount of people, it'll do that first and then turn around, all right? Just keep that in mind. The market does not reward the masses, right? So we got to make sure that we're not in with that herd mentality. Any questions on dollar CAD? Still a possibility for a stretch higher. Looking to sell that stretch inevitably while below this median line. Really a break below that 130.50, 130.60 level is now the new bullish invalidation needed to shift the focus back towards the 130 figure. Chris, I'm right on with you, brother. All right, so that is dollar CAD. That was on here as well. We got that one out of the way. Aussie Yen, we got out of the way. Sterling CAD. Who wanted to cover Sterling CAD earlier in the session here? Permendra, this one's for you, buddy. Here's what Sterling CAD looks like. Haven't checked it out today, so let's take a look. Hey, John, you're more than welcome, man. I appreciate that. Um, Sterling CAD. So I know that the swing side of trades are in this right now. Looking for some move lower. Guess the target on that one, I think Jamie told me was 118 something. Oh, that was dollar yen. Here it is, 198.90. Okay, so he's looking a little bit low. A little bit just above that low that we made for last month. Here's the new marker for November. Let's just do some on-the-fly analysis here. I haven't really looked at this so far this month, Permendra, so just bear with me one moment, man. It's going to be too steep. No, maybe not too steep. Um, Look, on its face value, all it's done is made a very impressive weekly opening range. Here's the weekly open. The weekly opening range low comes at a target we obviously were looking at earlier. I'd actually even choke that up here to the right to that low. That's 201.58. Opening range high comes in 203.05. It's a very wide range scalp. Um, I don't really have anything here for me, you know. I'd be waiting for a range break on that to do anything on this pair. The reason is that just again, it's got a 45 pip ATR. So from a scalping standpoint, I could do a lot of damage with this, right, Permendra? Not to mention that the holding costs a little bit more expensive because you're buying sterling. So I'd be a little bit more hesitant to get involved here unless we break that 201.58 from a scalping standpoint. If that does break, though, you do have some nice targets I think we can work with, and this is what I would be looking at. I'm not going to leave here without giving you something, so just bear with me. Whoops. Nice overlap at that 100. Close enough. So key region here, nice pivot in price, catching highs, catching lows, 100% extension, 50% retracement. This is going to be a nice level. A sort of initial target, if you see the downside break, 99.58. Be a 618 retracement of the move. As far as this is concerned, look, I don't have a necessarily huge resistance target up here, which is kind of why I'd be worried about the move higher. Let's just see what that retracement looks like. Yeah, so that's what I'd be looking at. It definitely looks like it should be a nice turnover here. Permendra says, I got that. I will wait for the break and keep an eye on it. Thank you, sir. Very helpful. Hey, it's my pleasure, man. And it's always interesting when you guys bring up pairs. Always encourage any pairs or specific trades you guys want to throw out there. We're more than happy to break it down for you. But looking at this right here, it does look like it's turning over. You can see that even a 20 or a 50-day moving average right there, been offering really nice guidance on a pivot basis on a close. Still haven't been able to make much progress through that. A 50 break in momentum, you'd expect to see a more prominent topside break, like something here or something here, right? Where the 50 break initiates a nice rally. Here, there's kind of just of a crawl higher. If this is really a multi-month resistance break, you'd expect to see a little bit more of a material shift higher. I'd be looking lower towards at least, on the daily chart, I really like that overlap down way beyond even Jamie's target, 96.20 to 95.60. I know it's a long ways away from where we are right now, but this thing has a massive ATR, 178 pips on a daily basis. So near term, this is what I'd be looking at. Not interested to play the long side, but if you break the opening range low, I think the levels are pretty clear here. I'd even drop a soft target for you, Permendra, right around here, man. Nice pivot in price. All right. Hope that helps. Wish I had a little bit more of a clean directional bias for you, but near term, those are the levels I'd be watching. Mark Haverman says, looking for sterling yen to really get some downside below 185, could just drop 1,000 or more. Yeah, me and Jamie have actually been throwing around the sterling yen idea for a long time too. Permendra says, thank you, sir. You're more than welcome, sir. My pleasure. Mark, yeah, I do like it. I'm just looking for the trigger, and I'm looking for sterling to give us the what's the word I'm looking for? Sort of the go ahead, right? Certainly, we finally making it below that basic 38.2. I think we were talking about this in yesterday's webinar on daily FX. This was just a quick pitchfork that we just tacked on. Seems to be guiding price okay. We haven't gotten too many pivots on it, so I'm not going to stress it, but keeps the downside focus below, or weighted to the downside below 54.66, which is basically last week's high. A little ahead of schedule here on the tag of confluence support. So these levels I'd be highlighting right now. Near term, you want to stay bearish below what is interpreted by me as the opening range low for the week. You tested a high, you came and made that low yesterday. Again in Asia, you tried to make a new high, you couldn't. Tested the low, and that held for a couple of hours before the inevitable break in Europe. So I'd be liking to use this as the opening range low for the week. Stay bearish below 54, let's call it, with a breach above 54.35 needed to shift it back to the upside. So it's just that I'm not really super aggressive here on trying to get long the dollar at the lows. So look for the pullback there, or look to play a possible rebound to the upside off of this barrier if we hit here later tonight. Pound has the BOE on tap on Friday, so I do not want to get in front of the inflation report, which I said the two is likely to be the bigger player. Remember, the BOE is actually notorious for like missing or undershooting the inflation target, and you're likely to hear, and I've been talking with a lot of guys on the desk here on Daily FX, and some guys that some buddy of mine's that work, or some friends of mine that work here in the city, they've been saying that they're expecting the BOE to start hinting that they maybe undershoot again, which would be a whole different picture. Long story short, seasonality does look for weakness in November, one of the worst months for sterling, and it would sort of pan out really nice here to give us one more spike towards the highs and then a reversal lower. Remember, on the broader daily chart for pound, really nice level of which would be a sort of a nice hold for a move lower, right? Look at that momentum signature trigger, that momentum resistance trigger. That goes all the way back to the highs. 3-point trigger now. And here we are looking like we want to turn ahead of it. So we will see. I don't know. Do you call that failure at the 100-day moving average for the, what, 6th time over the last 2 weeks, 3 weeks? Here's a November open. So as that pertains, to answer your question, as that pertains to sterling yen, here's what I'm looking at on the near-term chart. Let me snap this real quick. It's getting kind of messy. I was looking at this last night. The only thing that I kind of do like is still the slope of the ascent. And while we broke into the downside and even out of it, you can still see these sliders just catching really nice pivots in price. So I kind of want to see us break back below this, even if you extend another slider off of that low. You can see how just ridiculous the slope is. So if you do see a break here, you have a nice confluence support near 85.25. Former upper median line parallel of this decline, and basic trendline support, slope support. That comes in early tomorrow. Some nice divergence into the highs. I mean, it could be. I just need to see a little bit more of a prominent turnaround in the pound. And the dollar yen looks like it still has some weakness to go before that turns, right? So if they kind of fit together, I'd love to be short pound yen. Mark says, yeah, that's why under 85 lift off to the races maybe. I think so. That'd be great. I'd be on that one. If we make it down that low, that would put you right back on course. Remember, 85 is also that July low, almost to the pip actually. I think it was at 85, wasn't it? 84.98, close enough. More importantly, I have this 83.90 level, which is not just the swing low that you made there, but it's also the high day close for the initial stretch back in October, and it coincides very nicely with that upper median. So this right here would be the target on the break below 85. Mark says, also would put us back into the longer term bearish fork. Yep. He says, well, yours is different. Well, I'm working off the absolute high from the June and August. If you take that, there's a couple of different ways that we have this drawn. I've been looking at it from a couple different angles, but if you do something like this, that actually keeps us still in it. And that puts the median line actually catching these highs. I was looking at this earlier. Messy on the downside. Is it in play? Puts the same resistance barrier as what I'm looking at already. So as always, deader of the two slopes, just guiding price action a little bit cleaner. Thank you, sir. Helpful as always. My pleasure. Lori says, what time frames are the swing trades executed on as opposed to scalps on the 5-minute? So, Lori, swing trades don't necessarily require a trigger in price, right? Swing trades are completely based on the structure of the advance to the decline and the risk-reward ratio. That's it. The analysis is usually done on an hourly chart, 240-minute chart. Jamie's the king of the daily charts. I mean, that's what he does best. Daily and weekly is sort of his area of expertise. So, Lori, we really just look to highlight levels and proper risk-to-reward ratios with the broader trend on the swing trade. And, whether you're looking at that in a 5, a 10, an hourly, doesn't matter. Lots of the times, which is why we're able to provide for that type of strategy, just basic, pending trades. You could just see here, put your order to entry. There's your stop, if then OCO on the stop and the target, and let it play out. Make sense? Lori says, okay, thanks. Hey, more than welcome on that. All right, guys, that's the ringing bell for the New York Stock Exchange behind me, so I'm going to have to wrap it up here. We'll be back on tomorrow. Remember, you do get the ADP print just 15 minutes ahead of the webinar, so keep your eyes on that. Market participants are expecting about 180-some thousand for that release. We'll be back on tomorrow at 8:30 Eastern. Also tomorrow at 1 p.m. is going to be the midweek strategy webinar with Jamie. I'm sure you guys have a lot of questions for him, so keep that on your schedule as well. All right, best of luck trading, and I'll see you guys tomorrow. Cheers.